show is brought to you by Tropical Bros. If you're watching the YouTube, you might notice that I've got this snazzy, stylish, comfortable teal quarter zip. Who's Tropical Bros? Who's Tropical Bros? They make the best Hawaiian shirts in the world. They're breathable. They're just lovely and delightful. And got news for Animal Spirits fans. We might be cooking up an Animal Spirits Tropical Bros collab. Might be a new well design in the works. There just might be. If you are interested in picking up one of these stylish shirts, quarter zips, Hawaiian shirts, go to tropicalbros.com.
Compound and Friends 77. Whoa. Big crowd in the house today. Very excited for today's episode. 2 returning fan favorites. Guys, I wrote introductions for you. Or somebody wrote these. Phil Huber is the CIO of Savant Wealth Management, a multi-billion-dollar wealth management firm, and author of The Allocator's Edge. Welcome back to the show, Phil.
Thanks for having me again.
Thrilled to have you. Tell everybody where your accent is from. It's very exotic.
That would be Chicago suburb.
Attaboy.
Yeah.
Say bags. Can you say the word bags?
Bags.
There you go. No, don't say it like I say it. Say it like you say it.
Bags.
From Chicago. Bigs.
No,
What?
bags.
Bags.
That sounds
All right.
normal to me.
All right. Doug Boneparth is the president and founder of Boneparth Wealth, not from Chicago. Doug, where are you from?
I'm a Florida man.
Say bags.
Yeah, but where do you really live?
I live in Jersey now.
That's right. Doug is from New Jersey. He's an independent RIA focused on serving high net worth millennials and author of The Millennial Money Fix. Welcome back, Doug.
Thank you.
All right. Phil got more applause than you. I don't know why. Netflix is going to report earnings today, and we're going to get that as we're taping. You're going to do your typical reaction to it?
Well, I'm a shareholder, so I'm definitely going to react.
Are you in the stock now?
Might overreact, yeah.
Okay. What are you looking for?
I don't really. I mean, now that this is not the
Price go up.
This is not the quarter I'm focused on.
This is not the
What are you
quarter you're
focused on the
focused
next 3 to 5 years?
Last
Listen,
quarter?
I'm a long-term investor. No, I mean we're gonna get preliminary results of like their rollout for the ad services in like Latin America and other things, but we'll
The
see.
expectation is that they'll add 4.5 million subs, which would be an acceleration over 2.5 million subs or something.
Plus,
that
the
they
stock
added.
just went on a great run. I would be very unsurprised if it fell 9% right after earnings. Very unsurprised.
Wednesday is in their top 3 shows of all time.
I don't get into it.
Very good.
Loved it.
Oh,
Love
the
it.
Addams Family thing? Is it good?
Yeah,
Yeah.
it's so good. It's what's his name? Tim Burton.
Yeah.
Is involved, and
He did
that's
it.
his wheelhouse. And the little girl that plays the main character is an incredible actress.
It's like more comedy or drama?
It's everything. It's horror. It's comedy. It's
Jenna Ortega.
She's
great.
She's
got like
amazing.
100 billion Instagram followers. She's huge.
Yeah. And then they went viral. There was an episode where she does this like prom dance
The
or
Wednesday
something.
dance.
I know
The Wednesday dance.
she's a scream.
So
It's
out
a
of the
throwback. It's a throwback to.
It's cool.
Addams
It's
Family.
a throwback.
The show
to,
the show is not a kid's show, but the
Okay.
main characters are teenagers, but it's cool. You can take my word for it. I don't usually like stuff like that. All right. The big thing that happened this week, guys, is that bad news became bad news. That's my big takeaway. We had weaker than expected economic data on a lot of fronts, and stocks are no longer cheering weaker data, like thinking that the Fed will pause. Now, like stocks don't like bad news.
The
The way
narrative.
it should be.
The
I
narrative.
feel
is
like that's
shifting.
how it should be.
The narrative shifted.
It feels
Correct.
good that bad news is bad news again.
Last year was weird. Last year was like, oh man, I hope I hope the unemployment number misses or something.
It was Bizarro World.
It was bizarre
Everything
world
was
for
absent,
12
yeah.
months.
Mm-hmm.
So it's not that anymore. Retail sales were weak, manufacturing is weak, PMI was weak, and stocks went down. Does that get the Fed's attention? Or
No, definitely not.
no, not
The
weak enough.
stock market for the last 2 days? No, I don't think so. Oh, you mean the data that came in?
The data itself.
I don't think they're looking at retail sales necessarily. PPI, obviously, sure. Let's quote Nick Colas and Jessica Rave from Data Shrek. They said, the takeaway from yesterday, take a too low VIX. By the way, VIX was like 18 yesterday.
Yeah.
So you take a too low VIX and an outside move in the 10-year, stirring weak retail sales and a growing belief the Fed needs to pivot and soon, and you get today. The only question that matters now is what happens tomorrow and the next week, month, year. A potential other thing that's going on, because the market is well off the lows. Stocks were down like over 1% today, and they're down 30 basis points as of 3 o'clock. Our friend Chris Sidiel, who does a lot of like market structure volatility stuff, put out a tweet today, What is dropping the market? Is it real recession fears or the OPEX dynamic we spoke about last year? 61% of 1,000 votes at a regular OPEX dynamic. Let's stipulate that a lot of his voters are probably market structure people and know a lot more about the shit than we do.
Well, it's a good thing you brought in two market microstructure
There we
experts
go.
today.
Yeah,
There
let's
we
go
go.
deep on this.
But so, hold on, just real quick. So Chris did a paper last year and showed over a 3-year period, our backtest shows a 15% loss from buying the S&P 500 during OPEX. So we're in one of those weird periods of time where
OPEX for the listeners. Options expiration.
which is that the third week of the third Friday. So there's some funky market dynamics. And guess what? If the market is up 4% over the next week, well, then we could probably safely say it was market structure dynamics.
Yeah.
I would say hard no.
Well, we'll find out.
I would say the amount of people reacting to market structure dynamics is very small versus the amount of people that are now fearing a recession and carrying out that fear in terms of what they're doing with their portfolios. It's not retail, though. It's like positioning shit, but on a very grand scale. And maybe the options market coincides with that. Maybe it doesn't. But I don't know. I feel like I think the recession meme is picking up steam again. And I don't know. I mean, it's if we continue to get bad data and the Fed pauses, maybe there'll be a huge stock market rally. But then what?
So Liz Ann tweeted today, even though retail sales lost momentum heading into the end of 2022, they increased by 7.2% throughout the entire year, which was the strongest nominal annual gain since 2004.
So what are you telling people when they ask you what you think of the market, what you think of the economy?
Yeah, so we as you well know, we're not tactical market allocators. We're strategic long-term allocators.
All right, get the out.
Yeah, you don't want me here. So the recession thing, it's like the most anticipated recession of all time.
Yeah.
Everybody's talking about it. I think there was
For over a year.
Campbell Harvey, the father of the inverted yield curve research, even he said, despite it having a perfect track record of predicting recessions, he's not buying that this time is going to necessarily have the same outcome. Because in his view, if it becomes this signal that everyone's paying attention to, then people start managing risk around it by making changes to their spending, or if you're a corporation, what you're investing in. So it's almost like all the preparation and anticipation will probably, you would think, lessen the eventual outcome, whatever that may be.
Right.
And so I think, again, it's last year was a really weird year in so many ways. I think it really surprised people that took it on the chin with a big chunk of their fixed income portfolio. The response now is not to ditch that part of your portfolio. And it's probably surprising coming from a guy who wrote an alternatives book that
Let me ask you a question. So, do you get specific questions about what types of alts you're including in allocations and whether or not you think they'll help offset a potential recession? Like, are people using alts purely as a way to hedge that possibility, or there are other reasons for alts in your portfolio?
For us, it's mainly looking for different sources of diversification that can be complementary to stocks and bonds. And so
Is now the time to get into chicken nuggets?
Yes.
So if you look at without getting into specifics, there was a lot of different types of alternatives, and that's a very broad universe. But there's things that held up relatively well last year, either with minimal losses or in some cases gains. Like managed futures had a phenomenal year.
Yeah.
Trend following strategies there's a lot of research supporting that they tend to do well in inflationary periods. You have something like, anything with floating rate as opposed to fixed. So like things like direct lending did well. So there's a lot of different diversifiers out there that can help in years like last year. You probably shouldn't try to time them, and that tends to be what the industry does.
Let me ask you about that. Isn't the worst time to allocate to a specific type of alt right after it just had a great year? Like, alts don't trend the way asset classes trend. Alts tend to produce big performance and then mean revert. Or do I have that wrong?
It depends, because there's so many different asset classes and strategies. I would say what is common is that you see a year like something like managed futures. We'll stick with that example.
Let's stick with that, because I think most of our listeners are aware of AQR.
Yeah,
they have a managed futures fund that did really well last year after a lot of tough years.
And there's a lot of different managed futures funds and ETFs, et cetera, and they all did pretty well last year. The challenge is they had a rough 2010s, and so people that allocated to the space, post GFC, probably gave up on it, in the midst of the bull market of the 2010s. And then didn't stick around long enough to reap the benefits in a year like last year. So you have to spend the time on education, both as the advisor, understanding where does this go in a portfolio, how do I size it, how do I properly set expectations with clients.
That third one,
and then you have
really
to and then you got to translate that to your end client in a very simple way, which can be really challenging because these are complex strategies and asset classes. So I would say for advisors interested in alternatives, you got to be prepared to do the work. You got to go into it knowing that you're introducing more complexity. You're introducing things that people aren't used to owning, and you can have a really poor experience if you're trying to time them.
Well, so
incorrectly.
maybe I'm overstating this, and maybe I'm not being fair, but like my opinion, most advisors, they look at managed futures as a category last year, went up, 35% or something, crazy number?
Yeah, like I mean, we're talking. Yeah.
All right, so that looks great in a back test. And if I'm trying to win business from a client who is unhappy with how their advisor did last year, the easiest thing for me to do is bake in a managed futures allocation. That makes my back test look better of the portfolio I'm selling a client in January 2023 as the solution to why they weren't happy last year. But we know, like, if you do that, you'll win the business and you'll probably disappoint the client. Is that overstated? Is that fair?
I think that's fair.
That's why, for me, it's find within the broad universe of alternatives, find the things that you truly have conviction that there is some intuitive risk premium that you're earning over time.
Okay.
That you think it can be dependable, to be uncorrelated or lowly correlated to stocks and bonds, and just be prepared to hold it through challenging periods. Like there is no silver bullet investment that's going to work in all environments, and the same goes for stocks and bonds.
Yeah,
we saw that last year.
That's investments.
What are you telling Ruby and Hazel in these with these alts?
Listen, their NFT portfolio is down bad, guys. Like my kids don't trust me with their investments anymore. Rightfully so.
Okay. So isn't the hardest part about being an advisor and utilizing alts, isn't the hardest part like explaining and then re-explaining to clients why you own it through a period where it's not performing?
Oh yeah, 100%.
Okay. And then the second hardest part is we preach diversification, but if you buy like 5 different alts and they all work against each other, like what is the end result for the portfolio? Like you want to not push and pull your own performance.
Absolutely, and I would say like you got to be really understand what's under the hood. But like when you look at, like, I'll just for examples use the different kind of core alt asset classes that we utilize at Savant. We have direct lending, we have real assets, catastrophe reinsurance, managed futures, et cetera.
Right.
None of those things have anything to do with each other, and so I don't view those as like one's going to do well and be offset by the other one going the other direction. They're different asset classes.
They're non-correlated. They're not inversely correlated.
Yeah, I think if you were to but what happens is if you look at the universe of like say multi-strategy, like liquid alt mutual funds, a lot of them have a lot of market beta, despite having alt in the label. So those tend to be the ones that people prefer when markets are going up, and they look great because they're going up at the same time as stocks and bonds.
Hey, look at this alt. It also went up.
Exactly.
Right?
So I think you really, but it's a double-edged sword because then the truly uncorrelated stuff, like you talk about like the stuff Cliff and AQR do, like that gets really tough to hold because the investors often lack the intuition around explaining performance.
Well, it's also like in a managed futures fund, you could be short like cotton or sugar, and imagine explaining that to a client that sugar was a big drag in performance. Like, what? My short sugar position?
Well, I think we're like hardwired to want explanations for performance.
Yeah, of
like
course.
we want to be able to explain. Like, if stocks were down today, I want my alt to be up, but it's not always going to be up, and it can be a frustrating experience. And so, but that's what uncorrelation is.
And also now there's the need for alternatives has diminished when it's staring us right in the face. It's Treasury bills, right? Like you could finally earn some yield in cash or cash equivalents or short-term bonds. So everyone's all over this trade. There was an article in the journal Bonds Over Stocks that people are finally allocating to stocks. We heard that from Schwab. They said that their client allocations to fixed income was up 66%. Year over year. And there's this great chart in the journal, and it makes our job a lot easier, showing the amount of allocation that you need to have in bonds to own a 6.5% yield. And say
bonds are like the new FANG
I think they're misusing the word yield there.
Yeah, but I think
that's a 6.5% expected return.
Wait, what is this?
Just expected return to get to a 6.5% bogey. That's what they're really saying.
Right. And yield should be replaced with expected return.
In 2015. It was impossible, right? We know that we were pushed down on the risk spectrum. 80-20 was the new 60-40, and now 60-40 is the new 60-40. We're back.
This almost looks like 40-60.
I mean, when you hear bonds have had their worst year in a century, how are you not like, maybe I should buy
Treasury bonds just had their worst year ever.
In a century. Like if you're into scooping up discounts and discounted assets, how is
I think people are going to get bored with this now that the yields have come. Like the 10-year is what, 3.3 now?
3.3. It depends what the stock market does. if stocks go up 10% in the first quarter of the year, out of odds into stocks.
This is a lot. This is a prime last year play. Like you know,
Totally.
you want to go back and scoop up those bonds. Then they're probably less attractive
So
now.
as like a signifier of the new zeitgeist, our friends at Public,
Yeah,
the online.
I work
Okay,
with them.
so Public just launched. This was this week.
They're great.
Yeah. So Brooke sent me this. Shout to Brooke. Shout to Public. They have 3 million members. This is their press release. Began rolling out Treasury accounts. Treasury accounts are a new type allowing members, that's what they call their clients, to invest their cash in U.S. Treasury bills that are automatically reinvested at maturity and can be sold at any time. Public's Treasury accounts offer members similar flexibility to a high-yield savings account, but are currently offering even higher yields. So basically, not a lot of people understand this, but it's very hard to directly buy Treasury bills in a brokerage account. And I would guess the typical Public member is a young investor.
20-something.
So they're marketing Treasury bonds to young investors, and that's when you know this is the hot trade of the year, right?
It is though.
Well, I think
Last year was NFTs.
To me, it's a no-brainer.
So now it's come full circle.
There's some great cash management services out there for folks that want to keep just true FDIC cash. There's
I know what you're going to say.
Yeah, there's groups like Flourish
Flourish.
and Stonecastle that are getting.
I don't know what these are. What's
they
Flourish?
They basically allow you to. They work with different partner banks to.
Do you know them?
Yeah, we've
Yeah,
spoken
Flourish,
with them a bunch
Stonecastle.
of times.
They're the two main ones in the space. But
So they can get you the highest yield without having to
yeah,
switch.
without moving your money around
yeah.
a bunch. You have one account, but they're depositing it at all these different partner banks and getting these locked in like rates. Not locked in; it's going to fluctuate over time. But right now, you can get call it 3.5% to 4% of just FDIC covered cash.
No, they're 4.15 on the first $250,000 on an individual account,
It's
including
a bank account or a brokerage account?
high yield. It's a high yield savings
It's a high yield
account.
savings account.
High yield savings account.
Just like competes with Marcus, competes with Amex and Ally.
So the thing is, when you have an account, let's just use Marcus as an example. When they get to critical mass or scale, they can just like stop competing, right? Because like people, it's inertia. People don't move. So what companies like Flourish will do is they'll basically work with all these different banks and they'll do it for you behind the scenes.
They'll do it. They'll jack up the FDIC insurance. Just here I am.
Well, the point being, like not everybody cares that much about FDIC coverage on all their shorter term holdings. So to be able to do something like what Public's doing is, okay, maybe you got your emergency savings in cash, and then go a step above that for your second tier of liquidity and get a little extra yield. I think it's a really smart idea.
So people are very sensitive to differences in yield, and they will go through a lot of this extra effort.
I'm way too lazy for any of that.
No, I don't think so. People don't move.
Well,
You don't think people
No,
move?
they don't. They don't.
We're
You know how I know?
gonna
You know how I know
talk
that?
about this later
Because
in
there's
the show,
trillions of
actually.
dollars in savings accounts. That's how I know. People don't move.
it never ceases to amaze me. I was just on the phone with a client yesterday. They're telling me how much cash they have on hand. I'm like, that's in a high yield savings. I don't care which high yield savings account it was. I don't care if it was 3, 4, whatever. And they're like, nah, it's sitting in
Getting 10 basis points.
Right.
0.1.
That's the huge opportunity. Like rather than trying to squeeze out an extra 5-10 basis points,
There's trillions
that's
of dollars.
That's a waste of time, especially because these rates are going to move all the time. Like just find a place
And
where
the
you're
banks
not
are
getting
gonna
zero.
and the bank wherever you're doing this, they're going to change their mind multiple times about how much yield they want to bleed out versus keep for themselves.
Yes.
Right.
Like no one's always going to be the highest
No,
yield
and that's
provider.
why just find a provider you like, and that gets you materially more than you're getting in your brokerage account, just sitting in sweep cash, and
It's called yield
and You'll be in a
chasing.
much better.
It's almost like the fire movement people. Like, oh, you're gonna switch banks every day. It's like,
No,
who's got
tell their
time for
friends
Nobody
like
does.
I'm getting 4.11.
Yeah, that's insanity. Just
It's time for that.
Make sure you're not getting zero, and then
just get the leading
Worry
digit.
about the
Get
rest
the
of
leading
it.
digit.
Well,
right?
I'm getting 4.12, and I'd be like, well, your wife's probably cheating on you while you're doing that shit.
Let's fight.
Your wife's with her trainer right now. I don't know if you know. So
Where is the line though? There has to be a line, right?
There's
Where
no
you would
line.
Move.
No.
where is the line? We're going.
You know
We
what
don't
I'm
need
saying?
any
No,
You
line.
can get 2%.
but they're going to put
It's not gonna be that
the
wide.
differences aren't
It's
going to be
not
that
gonna be that
big.
wide.
Yeah,
They're all-
it's going to be like
they're all
10 to 20
competitive.
basis
But
points
some
difference.
of them tier it. So like on the first, and we're talking big sums of money, but first 250,000 you get the 415, but then on the next dollar after that it drops to 25. So there you're gonna
It's a limit to what they can.
Yeah, there you'll open up a different account with a different registration instead of joint like individual, or you'll go check out the other competitor and just put it over
So
there.
I was watching CNBC the other day, and they had like the Bank of America Fund Strategy survey and updates on there, and it said contrarian play buy U.S. stocks. I said, wow.
It's a bold move, guys.
Wow. Now it's a contrarian play. So John, throw up this chart if you don't mind.
This is wild.
They the net percentage of asset allocators that's saying they are overweight U.S. equities collapsed.
How do you read this? -40
Negative.
net percentage say they are overweight U.S. equities. This is the fund manager survey.
So like,
Yeah.
This is an awful chart.
Well, it's
now
the
look
scale
at
is weird.
Look at the prior periods in the early 2000s. Like that was the last big stretch of non-U.S. outperformance.
Right.
Was
Yeah.
This
you know,
looks like
02 to
this
07.
looks like one of these charts that you will look back on and be like, yeah, that was the time to buy stocks.
or is this something that economics going to put in his
No. This is not. This is not a
crime
chart
law?
crime.
No?
This is not a chart crime. There's nothing criminal.
No,
about
this is just portfolio strategists prefer bonds now too. Like they're in on the same trade as everyone else.
Yeah. So economists are not budging. So we had spoken about the possibility of a soft landing, like increasing. Larry Summers was on it this week. Bullard was on it. Economists are still not budging at all. Now they see a probability of a recession at 61%. It was 63% in October. So new data, but same pessimism.
Can I ask you a question? Isn't this in your best interest career-wise to just predict recession? And if it doesn't happen, nobody will be mad at you?
That's what I did.
Happens all the time.
If you go the other way and you say no recession and there is one,
Yeah, imagine being an
no one's
economist.
mad.
like an asshole.
Imagine being an economist and missing this recession if we get one.
Yeah, this is the one that you have to foresee
Yeah.
if you're in that business.
There's two problems here. Number one, anytime that I'm like actually have conviction on something, I'm wrong. So that's how I know. But
Do you have conviction that this is going to be a recession?
I have stated in client meetings that if we're not already in one, we're hitting one. And I literally say what you said.
Yeah.
Nobody, and if I'm wrong, nobody's going to be mad
Yeah,
at
what's
me.
the difference? You were being cautious. Smart dog.
I feel that way.
Good
but
dog.
It's such a.
No. But that's what but so that right. So the
Why would you not set that
the
expectation?
risk is in the other direction. No recession. Don't worry about recession. And then there's a recession.
You lied to
said
me.
there was not going to be a recession.
And I'm down.
Therefore, you're an idiot.
Well, then
You're the reason I'm down.
Is there the chance that this is, if it manifests, is it going to be more of a localized recession where, like, right now, all the layoffs seem to be happening in tech, but it's not really affecting other parts of the
It's
job
going
market?
to, and it's
Wait.
going to happen all at once. It's not going to be this gradual.
Will it happen in everything everywhere?
No, 1 month, all of a sudden, we're going to get shocked finally to the downside by a non-farm payroll report. I don't know if that's in August or if that's in February, but that's how it's going to work. It's not going to be it's gradually trickling. I just don't think so.
What's the relative measure
disagree.
there? Like use 08 as your like as your
No, one of
benchmark?
these months they're going to be calling for 150,000, and it's going to be negative 100, and that's when it's going to be game on.
You might be right. I disagree.
And
but
they're
you
going to
might
be
right.
shrieking at the Fed on FinTwit all day.
Stop.
And yeah,
So, all right. So, speaking of screaming at the Fed, so inflation data is rolling over bigly across the board. However, well, not across the board actually, because the chart that I'm showing, I think this is from the Cleveland Fed. Median CPI has not peaked yet, or maybe it has. So we have core and purple rolling.
Cleveland
There's
Fed
too-
hasn't
there's
won a
too many
championship in
CPIs
so
in the
many in so long.
Green is just headline, and then median is just median. That's exactly what you think.
We need more variations of
Wait,
CPI.
what is this?
You've never seen this, the median CPI?
Where's eggs?
But what's the significance of median?
It's not overweight any one area.
Oh, they're
It's
taking
just-
all of the
yeah,
components
yeah,
and equal weighting
yeah.
them?
Yes.
Oh, that's smart.
Yeah. So
should launch an ETF on them.
services, which is what they're worried about, still has not peaked. It's still going up. So goods has collapsed, energy has collapsed, but everything else is still kind of rising.
Except for eggs.
Except for eggs. I can't have an.
You don't want to get on it?
No.
Why is that I'm not up to date on why is the egg thing like a running joke?
It's
'Cause
not a-
people are like genuinely
People love
upset
eggs.
about egg prices.
Eggs are cool.
No, you and Ben were talking about eggs on animal spirits.
Because everyone's talking about it.
Yeah,
I just-
it became-
It turns into like a meme. It
here's
was
my
like
only-
toilet paper in
yeah,
the beginning of
it became a
COVID.
meme.
and-
Here's my
became a
only
meme.
opinion on eggs. Keep your celery out of my egg salad.
What? Oh, egg salad. I was gonna say who eats celery with eggs?
Right?
Egg
Do we
salad
agree?
is just kind of gross anyway.
No, egg salad's great.
Well, he's not Jewish, so he
Yeah.
doesn't.
Yeah. I'll go either way. As a kid, I would never want that in my eggs.
Yeah, that's right. I've grown up.
Now I'm old.
I've grown up. I could take a crunch.
Now we
I
eat
don't like
cottage
no
cheese.
chicken salad, no
No tuna,
potato salad, no
no-
egg salad.
no tuna
none of
fish?
those.
So-
Oh God, no.
Sorry to interrupt your lunch order, guys.
Yeah.
Fed officials have signaled they don't expect to cut rates this year. Economists disagree. 51% expect the Fed to start cutting this year, although that is down from 60% in the last survey. Markets are pricing in interest rate cuts this year. Pull this table up.
I'm
So,
okay with this.
so Q1 2024 is when the most people
You know what?
expect for there to be
Yeah,
the first
that's
rate
where I
cut.
am. I
That
don't think they're
seems
cutting
about
rates
right.
this year. They're just not going to do it unless things the wheels fall off. And I don't think
I
they're
think
going to.
absent a financial crisis,
Yeah, they're not going to.
I'd be
Because
surprised
they
if they
want, they want damage.
Why do they not want us off the heroin of QE and zero interest rate?
What do you mean, why do they not want it?
They-
It's a
that's
double
what they-
negative.
no, that's
do
what
they
they-
want us off?
That's what they want more than anything, I would think.
They what? They
Is
want to be
more
able to.
QE?
They want to be able to have the U.S. economy grow in an environment
it's never gonna
where
happen,
rates
sorry.
are 3-4.
No, they need to destroy the economy to make sure that inflation is dead. They need to slay the dragon.
I'm trying to give them a reason to do it.
Here's
I think the dragon's dead, but
my issue is that there's a history of them doing a complete 180 out of nowhere.
That's right.
May of 2022, last year, literally Powell said we are not actively considering a 75 basis point
Yeah.
rate hike. And then we got 4 of them right after that.
Yeah.
Like no, they were telling us
when
they
the
weren't going to do
facts
70.
change, sir.
Yeah, so that everyone's
Well, that's
anchoring.
why-
Everyone's anchoring so much to that they're saying now that they're not going to stop. Like
That's why their
sure,
their
but
forecasts.
they're not going to stop until they do stop.
Their own forecasts are worthless.
Yeah.
They've said as much. They know they are.
Can I just
They 180 all the time.
So get enough bullets in the chamber while you can.
and can I just say for the record for anyone who's watching this on YouTube, I know this hat is ridiculous. It's a flat brim hat. I know I'm embarrassed.
Oh no, we're not doing flat brims anymore.
What do you mean? I never was.
No, but nobody else is now.
Yeah,
That's over.
I stopped 4 years ago.
You have to put a curve in your bill, sir.
Well,
What's
can
a hat?
but you
What's a
can't
hat?
curve this. You can't
We're-
curve this.
We're just no longer doing that.
Good. They were so
No,
dumb.
you can curve it.
Flat brims are so
Like,
dumb.
not right now.
Do you
We're
remember
doing
those
something.
those devices that you put the brim in?
Yeah.
That would actually
Yeah.
flip it?
Yeah,
yeah,
little
yeah,
band
yeah.
thing.
I did
What?
that in Little League.
There's a curver.
Yeah.
Yeah.
Yeah. It was a rubber band, right?
Yeah,
Some
yeah.
curved plastic.
You didn't want
Yes,
to. You didn't want to be
rubber
the kid on the Little League team with the flat brim.
No.
No, we're not doing flat brims anymore. Okay. What's this from Ben Johnson, Mike?
I don't
Set
know.
this up.
Oh, here we go. This is a good one. All right. So Ben Johnson is I don't know. He's an investment analyst. He's a
Yeah, he
ETF
head of
guy,
ETF
yeah.
research at Morningstar. I'm not sure his exact title, but
Sounds like you're pretty sure.
So, Ben, correct me if I'm wrong. Ben's a great guy. I love Ben. Yeah.
All right. So
love this.
he had a great chart. Year end, 22 numbers are in. Mutual funds had $958 billion in outflows. ETFs had $589 billion in inflows.
What the hell is this?
Tax loss harvesting.
That $1.55 trillion swing in favor of ETFs is the largest ever. So there were people, to Phil's point, that were stuck in mutual funds for the reasons that he just
Oh,
stated.
they had big gains.
And so
for
now
years.
they
Couldn't get
switched
out.
out of their
Yep.
funds and into the ETFs.
They were waiting to switch when it wasn't going to create a big tax.
Has
bill for
anybody
them.
been more right about this than Eric Balchunas? Like people are saying that like the bear market was going to be like a boon for active. It's been the exact
No,
opposite.
and the same thing happened in 08 or 09. That was the initial
Okay,
wave of
so
like
the
ETF
reaction,
adoption.
how perverse is this? The reaction to a bear market is even more money out of mutual funds, even more money into ETFs. But theoretically, the bear market is precisely the moment when they should be taking in inflows because that's when their strategy
that is true.
Well,
should
here's
start to work.
and it
the-
has been. Active's done well.
The challenge
Active
there
had
is
a
that
great
the
year
lines
last
the
year and
lines are
still
blurred
lost
though.
money.
There are a lot of index mutual funds and like quasi-index mutual funds, and there's now more and more
That's true.
active or
That's
like
true.
strategy-based ETFs. So it's hard to just look at like ETF like the wrapper.
Yeah,
and
but
see
we
the
could
inflows and
guess. We could guess that the index mutual funds were probably not the most liquidated category.
People are not. No, it's not.
Sure,
It's not
yeah.
Vanguard index funds that people are.
And
mutual
I
funds
wonder
people are
too,
getting
like they don't break this out by equities versus fixed income, but like fixed income for a long time was hanging in there in terms of flows
Active.
going into active relative to equities. And a lot of big, core plus funds underperformed the ag last year, and so maybe you're seeing.
Well,
some-
guess what? It makes sense to be an active theoretically when you need to like outperform an index that's yielding 1.5%.
Now this would be the environment for active fixed income managers to demonstrate their value over the next,
Can I tell you something? And not to name names, I looked at the biggest active fixed income mutual funds in the world. Like they're doing 2% a year for the last 10 years.
Well, it's tough. I mean, what is it supposed to do?
What's the point? Now there might actually be a point. So like
I like an active manager.
this is no disrespect.
No,
Like
no,
the
no.
benchmark is doing nothing either.
yeah.
I'm
So-
I'm actually struggling with that a little bit. I for a long time have always been, okay with an active manager on the fixed income space. I thought there was opportunities for them to actually outperform there.
In which direction? Like take less credit risk or
Well,
take
on the
more
way up
credit
they
risk?
were. On the way
if you
up they were.
examine like what
Yeah.
most active funds over time, this is generalization, but they've basically taken less duration risk, more credit risk. Is how they
Like, that's the trade.
That's been the trade for so long.
Yeah.
And so
Which is fine because theoretically they should know which credit risk to take.
right.
Like that's what you should not be paying them to try to outguess what the Fed's going to do.
Yeah.
It should really be like these securities we think are less risky than the market is pricing them at,
Right.
and that should be where the alpha comes from.
Absolutely.
Okay, so that has been the case.
Yeah.
Okay, so all right, but let's say there's probably not as much fixed income in this chart. It's probably mostly equities.
No.
What?
No, because there were charts early in the year. There was massive outflows out of active.
But again, and some of that
bond
could go the
mutual
other
funds.
direction. Like
Massive.
So you think that's a big factor?
Yes,
in
I
here?
do.
there could also be situations where like sometimes people want to swap back into the things that they lost harvested once they get past the wash sale period. So maybe they have a bond fund they like that's active, but they went into BND or something like that, and then they're going to swap back out.
If you left a fund and now are in an ETF, I don't think there's any going back. At that
So you sell Double Line in December, or you sell PIMCO
whenever
or
it is,
whatever.
you wait the 31 plus days.
Go into Vanguard bond, aggregate bond, go into BND, 30 days, 31 days, buy it back.
Yeah, you avoid the wash sale. And
I'm with you.
If you like the manager still, you go back. If you
Nobody's
don't,
doing that.
The idea of
I-
tax loss harvesting in bonds is very weird.
I can get whatever I want.
People aren't used to tax
Yeah,
loss
my dad
harvesting in
never
bonds.
There were no losses in bonds.
Yeah, like the losses were always so
Forever.
minimal. So, and to your point about like the 10-year period of like 2% returns, like there's a lot of endpoint bias there. Like when you're measuring a 10-year
Josh.
period that just saw a 15% decline, that's going to have a huge impact on that long-term number.
I am known for my endpoint bias. I think that's
Let
been
me see your endpoint
I think
bias.
that's been well established.
The bet is duration, and there's ETFs out there that can do whatever you want.
What do you
to
mean?
and
What do you
fix
mean by that? Say more.
it. Figuring out what the guess around the Fed. When are rates gonna either stop going up and come down and.
Yeah, if we knew, it would make our lives a lot easier.
Well, it's a bet, But my point is, there's a fixed income ETF to do almost anything you want it to do.
Yeah.
But if you want an active manager, yeah, you can go.
Oh, right. They have like they have the target yield. They have target date. they
Ultra
have-
short, mega short.
yeah,
It's
yeah.
all out
It's
there.
been sliced and diced in every which
You can
way.
get
It's
whatever
fine.
you want. So why would you ever go back to the fund wrapper?
Well, because you want somebody else to do the
Yeah,
bet
yeah.
for you.
unless
Not
you-
a lot of
That's why.
advisors want
Unless
to make
you-
all those
I
decisions
don't-
on their own. Yeah.
Unless you want active management. And if you're saying, hey, I want active, you got to go for the fund.
If your financial advisor has really strong views on timing the interest rate market, I feel like maybe you should consider getting a consultation somewhere else, right?
Just a
hold
thought.
on, let me play devil's advocate on that.
I'm a certified financial planner, and also I can predict.
No.
And I also
I could
hate tweet
predict
at the Fed end.
central bank activities 5 years from now.
What if you took the Fed at their word in the beginning of 2022 that Jerome Powell's saying we're gonna hike up rates?
Yeah.
You took him at his word. I took him at his word, and I'm like, okay, let's kind of maybe lower.
That was great. That was a
You
great
shouldn't
bet.
be
Maybe
trying to
lower,
outguess
maybe
an
lower
institution.
duration. Well, no. They were late to the game virtually the
I
entire
bet you
time.
we lowered duration before you did.
Listen,
Batnick.
I bet
no,
you're- I bet-
Batnick was
I-
on that shit.
I
I'm
bet-
telling you.
listen.
Like, I don't know if
something your wife.
Yeah, got it.
You shouldn't be trying to outguess an institution that they themselves don't know what they're going to be doing 3 months from now.
No, but I'm skating to where the puck is going.
Oh, that's what you're supposed to be doing.
Right.
But Phil, to your point, like even if I did make that call, but I have a problem.
Not to
now.
brag.
Not to brag, but I got to get it right now, the other way around, and that's really.
While
really
we're on
hard.
the interest rate discussion today, double downgrade
I like
for
this.
Charles Schwab.
That's a good call.
This is very rare.
Wait.
Bank of America Securities, which is what we used to call Merrill Lynch, double downgraded Schwab. Double downgrade is like you cut your rating and you punch the CEO in the face. You never heard? No, it's like you go from buy, you skip neutral, you go right to sell.
Dick Fold vibes.
What was the rationale?
B of A Securities on Thursday announced a rare double downgrade. It's like a triple Lindy. A rare double downgrade of Charles Schwab as the online broker stock fell sharply for the second straight day after its quarterly results. B of A cut its rating to underperform from buy, skipping the neutral rating, and slashed its price target to 75 from 92. Let me tell you the reason why. I know what you just asked me. Because about 60% of Schwab's revenue stems from interest rate sensitive fee streams, analyst Craig Siegenthaler said, quote, it's arguably the biggest beneficiary of higher interest rates across diversified financials, end quote. But the company now faces balance sheet shrinkage as clients take part in cash sorting by pulling deposits out of Schwab and putting money into higher yielding money market funds and bond funds.
This is a good call.
Schwab was in the pool.
Let me finish
That's
this.
why they had the shrinkage.
Slower interest rate hikes by the U.S. Federal Reserve will also translate to, quote, a declining tailwind for Schwab. So basically, they're saying that clients are going to start shopping for higher rates, and that puts 60% of Schwab's revenue, I guess, in jeopardy.
Don't think that makes sense?
Again, I'm a bad candidate to answer this question because I just don't know people who are aggressively shopping for higher rates all the time.
No. That's not what they're saying. They're going to take money out of their sweep account and put it into money market funds or high yield stuff.
Don't you think the people that were going to do that have already done that? You think they're going to, en masse, all of a sudden start being like, I don't like the interest rate on this Schwab fund.
now
we're the ones to do that.
There's such inertia there. That,
That's my opinion.
Like they have to be informed of their options. By
but this guy didn't cut it to a neutral. This guy went to a sell.
Maybe he's just a dick. I don't know.
Or underperformed, which means sell. Yeah. I don't know. My feeling is that people don't just all of a sudden do that at once. So what are we talking about here?
No,
I don't know.
He's right. Like you got to be in on the know. Someone's got to like tip you off the fact. Hey, you got this cash sitting in your sweep account. Now you got to go over to the Fidelity Money Market Fund or the Schwab Fund and go get your 3.5%.
So we're one of the advisory firms that like actively is sweeping cash.
Yeah,
but that's not every firm.
No, it should be. It's the right thing to do.
I think most advisors are.
Is that now table stakes to like be very aggressively managing clients' cash balances?
I don't want to be ever in the position where there's a big chunk of change sitting in a sweep account getting zilch, and I can go.
That's
get
it's an
four
easy,
on the
immediate
market.
value add opportunity.
100%.
If a client ever asks you and you didn't do it, you look really bad. If a client's ever like, "What is my cash earning?"
The only
and you're like
defense
0,
is
and they go, "Why?"
The only it's not a bad. There's a bad defense is we're how's it? You're waiting for an opportunity to put the money to work. That's not a defense. That's
how right, but you can't do that for a year.
Right.
Mm-hmm.
You know what I mean? Like you can't be like.
And even if you're waiting, you can still park it in like a money market fund or
that
something.
can turn into a bad look. Right
That's the other thing. It's not a CD. It's a money market fund.
There's liquidity.
You could buy and sell that the same day if you needed to. All right, I thought that was interesting. The rare double downgrade. Can we do some SBF stuff? Doug is a
Has Titus linked to him on abnormal returns yet with his Substack?
Lit.
Doug is a Bitcoin billionaire. I don't know if a lot of people know that. No, you're a Bitcoin. You own Bitcoin. You're not a Bitcoin guy.
I'm an early adopter and I own Bitcoin.
Okay, is it early enough that the wipeout didn't like take all of your gains?
2013.
Oh, you're fine.
I'm good.
What do you own it at? 50 cents?
$300.
300. Okay, you're fine this week.
But I put respect on it. I mined it. I didn't buy it.
Fair enough.
It's cool nerd stuff.
Did you mine it using clean energy?
He's your Xbox.
I put my kids on a giant hamster wheel.
All right. So there was this whole tweet thread from Bill Ackman about like why he wasn't sticking up for SBF. He was just like, hey, let's not condemn this guy. He's innocent until proven guilty. Ugh. And then he doubled down on it. And I think a lot of people were like, dude, what is wrong with you?
What is there to gain from it?
Well, he came out with his explanation and I read the whole thing and I thought it was pretty good. We're not gonna scroll through all the tweets. Why did we pull up this one in particular? Because why not?
No, all the way, other way.
Other way.
That's all the way up.
No, it's not.
Oh my God, this is quite the throw.
Many have expressed surprise about my interest in the FTX situation and my openness to the possibility that SBF may be telling the truth, as I have no economic interest or relationship with any of the parties. Perhaps some background. And then he tells this great story. 20 years ago, he was like putting out, he was selling MBIA, which was like a mortgage bond situation. And he was basically made the case that they were engaged in fraudulent activity, and he got his ass kicked by Elliot Spitzer, and they investigated him, and he was telling a story about how like because he was in the newspapers, like people were pulling their kids away from his kids at school. So he's just like, I know what it's like to be wrongly accused of something, and maybe he's being correctly accused, but like that's what court is for.
I thought this was reasonable. He's just.
I agree.
I haven't read the whole thing. I'm sure.
No, he's just saying like rule of law type shit. Like he's not saying that Sam's innocent.
I just don't know why go out of your way.
Why hang your hat on this one then? Why was this your moment to use your story as a way to say, hey, let the justice system work?
That's the one thing. Well, for the content. Everyone's in the content
Exactly.
business.
It's thirst, man. It was pure
Well, if he
thirst.
comments on some like
was
alleged
thirst.
criminal that no one's ever heard of,
Bill got
nobody's-
thirsty that day, went to Twitter, and
Now he's
and
quenched.
chose SBF, to tell this
Hey,
story.
wait, hold on. It is often years before a case is finally decided. The accused are owed the presumption of innocence during this period. And from a personal perspective, it sucks. You are treated like a crook. I remember the other parents pulling their children away from me and my daughter at nursery school drop-off when the Spitzer news about me dropped. I will never forget, and I was lucky as I had the resources to hire good lawyers and defend myself. The way that story ended is that MBIA was a fraud.
Went bankrupt, yeah.
And I think I don't think Spitzer apologized to him, but somebody apologized to him that was investigating him or something.
But these are apples and oranges. That's almost like you got the AG
Right.
and professionals. Like, you're going to apply that to SBF and all the stuff we got out of this. Absolutely.
That part is rough. You're right.
Why? I mean, it's just apples to bananas.
Who wrote this? You know how there were people who supported Dahmer in jail? Gives me those. Was that you?
Yeah.
It's weird that he chose this one because this kid very obviously created a hedge fund and then allowed the hedge fund to suck all the money out
I'm
of
tired of being gaslit. Stop it.
This one's
Stop it.
obvious.
Yes.
Yeah.
Stop
You
it.
think O'Leary's sending letters to SBF?
He's worse on
Fan,
this.
fan mail?
He's worse on this.
O'Leary.
Kevin.
Why? Kevin's not defending SBF anymore.
Not anymore.
Kevin's saying I got robbed.
Up front. At the beginning. I didn't like it.
At the beginning, so did Scaramucci. I think there was like a shock because this is not like an internet scam with a Nigerian prince. They hung out with this kid. They took him on.
Scaramucci just did a whole podcast with Ted Seides.
I got to
this
listen
week
to that.
where he talked about the whole situation at very great length and detail. It was actually like a good interview.
So I think they were in shock because they went on business trips with this young man. They went to Dubai with
All
him
over
and
the
stuff.
place.
Wait. So after Madoff, after 2020 to 2022, if there's any lesson I've learned, it's stop being shocked at crazy shit that's going
But nobody
down.
thinks that they're in business with Bernie Madoff. You would never do business with anyone again
Fine.
if your baseline expectation was I'm in business with somebody who theoretically could steal $50 billion. It's impossible to imagine.
You want to be shocked over how much money you just got defrauded out of? By all means, yeah, I'd be in shock too. I can't relate to that. So on that note, sure.
I don't think anyone, even the people that are saying he has the right to a trial, blah, 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 I don't think anyone thinks he's innocent.
But didn't they indict him today?
Did you just ask for the check?
Another water.
Oh, all right. We have 5,000 of them.
Please.
I was trying to be discreet.
I think they indicted him for defrauding FTX investors today.
Who?
Sam.
Oh, good.
No shit.
Yeah, no shit. This is my favorite story of 2022. David Einhorn had a huge comeback last year, and maybe not making as much money as he probably used to make because his fund has shrunk. But I love that this happened, and I want to go through this a little bit with you guys.
What was his 2020 and 2021 like?
Horrible.
Yeah.
Everything's horrible. Well, no, I think in 21 he made money, but
2015 was when he started talking about the bubble basket, and then Fan Mag became a thing.
A little bit early.
Railroaded.
I think his peak was 2014, and then it's all started to go wrong in 2015. Last year, Greenlight Capital did 42% gross of fees and 36% net of fees for
Incredible.
2022, which is amazing. One of their best years ever. And I just want to read a couple of things from this and then hear what you guys think.
I like the formatting of this in the doc.
The real story of the year is 51 points of alpha. I had 52, not to brag. To put that into context, in our worst year, 2018, we had negative 29 points of alpha. In 2001, our prior best alpha year, we had 43 points of alpha. Phil, can you explain when they say points of alpha, what they're really saying and why that's so important for the end investors in hedge funds?
Yeah, I mean that's why a lot of investors are seeking out hedge funds. They want better than market performance, especially from a long short equity type fund that should over time outperform the market. And so that's very important to them. And so that's what they're measuring is just how much did they deliver relative to what the S&P did.
If you're an institutional investor,
why would you pay 2 and 20 to a stock picker if you didn't think you were going to get some material degree of?
But if you're an institutional investor or a family office and you allocated to David Einhorn, and in 2021 he just bought the Qs on triple leverage, you still made a lot of money. Do you really care that it wasn't alpha? Does that really matter?
Yeah, because I mean, if you're paying a lot of money, you shouldn't be overpaying for beta.
Right. So
Okay. I mean, I've never.
So the returns aren't necessarily the returns in the eyes of the end client.
I'm sure there's some that sort of just like look at it that way. Others are gonna, if you're paying a decent amount of money for some kind of investment, you want to make sure that what you're getting is not something that you could acquire very cheaply elsewhere
Without paying the 20%.
Yeah.
Okay. This is David. 2022 was an exceptionally good year, in many ways our best ever, and is most comparable to 2001, the year after the last tech bubble popped. Before going into the glorious details, let us simply say we are probably not as smart as we appeared in 2022, but we are probably not as dumb as we appeared in 2018 either. The market environment, as we have been highlighting, turned extremely favorable for our strategy in a period that immediately followed one that was extremely unfavorable for our strategy. That's the most legit performance explanation from any fund manager I've ever read.
Yeah, and I think with something like long short equity, like not in addition to just like how they're doing relative to like a benchmark like the S&P, like you got to understand like what are their intentional or unintentional like factor exposures to it, because like ideally if it's true alpha, it should be coming from security selection. Like if they're just overweighting value stocks, you can go buy a value ETF.
Right.
You know what I mean? So it's not about just like alpha is not just like my return minus what the S&P did.
Right.
You have to kind of neutralize some of those other things.
It's the source of the return and the way the return was earned.
Right.
And there are people that pay very close attention to that.
And that's what real alpha is very, very rare. There's been a lot of research on this. There's tons of competitions in the hedge fund world. A lot of alpha was made in the early days, and then it got arbed. A lot of strategies got kind of arbed away.
Right.
So there still is some valuable hedge fund type strategies. It's just the like kind of pure alpha. It can be very fleeting, and it can be all over the place. Like no one's getting it year in year out. So I think it's a very tough space to allocate to.
So AUM for Greenlight in 2014 was $12 billion, which I think was the peak. It's $1.4 billion right now.
1.4.
It's one of the most incredible.
Oh wow.
That's why I love this story so much. Think about what this guy's been through. I want to read this really quickly. We are grateful to those of you who have stuck with us. We are pleased to be able to reward you with a good year in what for most was a difficult environment. We have learned a lot in this period and hope to continue to reward you. However, most did not stick with us, and understandably so.
And to those people,
the results for a sustained period were unattractive. For us, it was challenging to remain disciplined. Some have called us stubborn by refusing to make investments that didn't make sense to us. Many investors that have historically had a value bent either adapted, retired, or went out of business. Value investing as an industry is unlikely to ever fully recover. The outflows into passive and other strategies were debilitating. Prospectively, we think this is a positive for our strategy. We face much less competition.
But here's the thing, and I'm happy for him too and his investors. By the way, he said he's cumulatively earned $5.2 billion for his investors.
Dude, 36% net of fees.
Which is incredible. $5.2 billion cumulatively. How do you stick with that performance since 2015? It was horrible. And all credit to him. He never shut down and started up another one.
Well, nobody stuck with it because if the fund is 1.4, how much of that is his money?
He's over his high watermark finally, but
which is a bit surprising because a lot of hedge funds like just converted into family offices and
just shut it down. But the brain damage to stick with that year after year after year, that is a long time.
How about his employees who stuck with him?
Right.
That takes balls.
Yeah.
Like, how do you explain no performance, no carry?
Right.
You have a wife, you have kids. If you work there, let's assume you live in Manhattan, your kids are at Horace Mann or some ridiculous place, and the expectation is Ivy League. You know what it costs to keep a car in Manhattan? So think about the guts that it took. Like, if he has people that stuck with him through this whole period, they should be he should be forever grateful.
Big cash bonuses.
I hope they got a nice vest.
So here's a question. Like $11 billion left. And understandably, and he even says understandably,
down to his last 11 million.
Would you take any of them back if you're Greenlight? Would you take these? Anyone that left, would you take their money back?
Yeah, everyone gets a second chance.
Really? You'd feel that way?
I mean, if you're trying to grow the business,
I know you wouldn't.
Oh no.
Well, okay.
I would be stapling the fucking Q1 letter or Q4 letter. I would be stapling it to the front of their house.
Broad brush. There's a lot of stories and reasons and friends and
You calling me a broad brush?
You're the broadest brush.
Okay, go on.
It's the title for the show.
Yeah.
So somebody was like, hey, David, congratulations. Sorry I gave up on you. You really are the GOAT.
I'm sure
And
there are plenty of examples
here's
where
$300 million.
Yeah.
Maybe give him a different share class that locks him up for like 5 years.
Yeah, he should have like a share class for cowards.
Yeah. C class.
C class.
Yeah. No.
I don't think I would take even $1 of it back. I
From
don't care who
anyone,
it's-
no matter how heartwarming or not heartwarming, but no matter the story.
What's the story? You bailed on me.
My kid I have to pay tuition at Horace
No,
Mann.
dude, that's not the people pulling money out.
I know, but I would imagine you wouldn't say no to everyone.
You know what he should have done? He was something. My advice for a billionaire. Instead of flirting with maybe buying the Mets, he should have just bought an insurance company. And I know they started an insurance subsidiary or something.
Yeah.
Should have actually bought like a property casualty when he was at 14 or 12 billion.
Also,
or
a lot
whatever.
of that $14 billion, whatever, was institutional money. It's not just like high net worth investors.
No, most of it is probably institutional.
Yeah.
Well,
So
and
they-
institute. I mean, they're like everybody notorious for bad firing decisions.
So
all right.
to your point, easier to like have those feelings about an institution than individuals.
I think if you had lived through that as the manager,
Yeah.
you might feel differently about letting people back in. I know it's business, not personal, but everything's personal.
Yeah.
So anyway, all right, let's talk about wrestling.
yes, I've been
WWE is
waiting
up
for
for
this.
sale.
Ready.
You're like a wrestling fanatic.
Yeah,
Is that overstating it?
No, that's probably understating it.
Understating it. Say more. Go on.
Look behind you. You have a Goldberg action figure that I brought here last time I was
Part of
on
this.
the show.
It's part of the set now.
No, it's been a big part of my life.
Did you bring that here because it's the only Jewish wrestler?
That's what I gave to Batnick.
Okay.
I think I got you, John
All right,
Cena,
we'll
because of the
take-
hip hop
we'll
connection.
take it.
Yeah, I mean, since I was a little kid, just like big part of my life, I was always fanatical about it. But yeah, it was like the news. So Vince McMahon kind of wrestled his way back into the company.
Yeah.
I don't know if you saw that. Like he left pretty.
The stock collapsed. He came back.
He's
going to try to sell it.
77 years old.
No, well, stock's been ripping, but yeah, it was time for him to go away, and there was like external reasons as to why they kind of forced him out.
He had like a Me Too thing going on or something.
A lot of
It was
NBA stuff
it was
came out.
hush money.
They don't like
paid
that.
out,
Yeah, they don't like
to
that.
several women, but he is still the largest shareholder, so he worked his way back into the company, and intentionally with the idea of looking to sell it or somewhere.
So I don't believe that he'll go away.
Well,
I think anyone he sells it to, the contingency is going to be like, I'm not leaving though.
right, and that's the worry is that he's going to sell it to probably the wrong bidder who was willing to put him back in charge when no one really wants.
He's going to sell it to somebody in Saudi Arabia that like.
Well, that was the rumor last week.
Well,
when,
but Nick Khan, the CEO, was on Bill Simmons saying that was
yeah,
complete horseshit.
that got debuffed, but like that was. My heart almost dropped when I was on Twitter like last week and I saw that they might be selling to the.
I
Saudi,
thought that was actually what's going on here.
but the Saudis, if they buy it, they don't care about him like hooking up with girls and signing NDA. Like they don't care.
they bring back the Iron
But so
Sheik.
from the creative point of view,
Weren't
they doing
as a
well with
fan,
him?
I worry about the creative. Like the creative improved
with
after
him.
he left.
Right.
Triple H,
Yeah.
who's his son-in-law, was in charge. The product got a lot better, and it was like kind of one of those things like Vince McMahon, like total visionary, was a creative genius. I think he lost a step or two in recent years. He's an older guy.
So how did he get back in if things were getting better?
Well, he said,
Majority
he said,
shareholder.
I'm back. This is my company.
Yeah,
so I
so
think the most
he
natural.
basically stated he was coming in to help them with their rights renegotiations and to look for a strategic.
Sorry, when did he leave?
6 months
This
ago.
was about 6 months ago.
So I think the obvious buyer potentially is Amazon.
I think the most obvious is Comcast. I mean,
Why Comcast?
all of their content is on Peacock.
Okay.
So they have a big relationship there. Monday Night Raw is on USA, which is owned by Comcast as well. So but there's plenty of potential.
But I said Amazon because they're obviously very active with the NFL right now, and there's such a huge premium for live entertainment.
Yeah, and I think it's a very unique form of entertainment that's really hard to compete with, and you have such a loyal fan base. Like I think it's a very, very valuable piece of intellectual property, much like a
You know who
Marvel
competes
or
with
Star Wars
WWE?
or whatever it is.
Trump rallies. Same energy, same fans.
What's
I
the
dispute that.
Okay,
What's
I knew you
what's
would.
market cap?
No, if you put a Trump rally on up against what's WWE's biggest event, SummerSlam,
WrestleMania. You know this. Come on.
I'm pretty sure like you would hurt the ratings.
No,
You don't think so?
I don't think so.
Absolutely
All right,
not.
I'll just,
100%
I'll just go back and shut the fuck up now.
Kids love this shit.
I took my kid a few years ago to a WWE event
How was that?
at Barclays.
Awesome.
Holy shit, it was incredible.
Yeah.
Yeah. And I didn't know any of all the rest, like my wrestlers are all dead and in jail. But like the fanaticism in the crowd was amazing. There are no sporting events where people are this nuts.
Right, and that there's such
Maybe
value
college-
to that
maybe
brand
college
because
football.
like to have all that content history that you can go back and archive
It's
and watch
rich.
the old. It's just very rich content library. A lot of great like merchandise is insane. Like I think I mean I do worry though that any buyer is gonna over time mess too much with the product.
How big of a business is this?
So I was going to say, just to give us a sense of the scope of this versus like the NBA. So the Phoenix Suns, which are like a definitely mid to top tier franchise, just in terms of proximity to the West Coast and the city, and they the Suns just sold for $4 billion. That's obviously the Suns are one team, one out of 30 teams. The WWE has a market cap of 6.6.
That seems undervalued.
Seems-
but I don't know what the financials are. Is it?
I think they had their best year ever
They did.
in 2022, and what's
They do,
awesome.
they do $1 billion in annual revenue. Is that the number?
I think it might be.
Sounds
yeah,
about right.
Yeah, it
Do
sounds
they-
right.
do
So
they
the
still
Phoenix
do
the
that?
Phoenix Suns are not doing $1 billion
No,
a year.
and
I'll tell you
like
right
any
now.
sport, there's an off season.
They did
like,
1-3.
Wrestling is year round. There is no off season, and so as a fan, like there's no waiting for the next season to come back. Where they're like,
It's annual.
yeah,
Do they still do the Divas show?
No, they do not.
Oh, okay.
You like lady wrestlers? No, I'm saying like, is that
That show was great.
You're gonna get him in trouble at home.
Yeah.
Yeah, no.
No,
All
I,
right.
I watched it with Heather.
Who
We
do you?
love that
Who else?
show.
Who else is on the? It could be a buyer. It's not going to
There's
be
been
Apple.
rumors-
It's not going to be Disney.
You know,
FTX.
Disney was rumored actually.
They're out there, always out
I mean,
there.
I think it would make sense.
Can't rule it
Their
out.
content's probably a tad raunchy for
Yeah.
like the more family
Yeah,
friendly
yeah.
stuff.
There
that
are a
Disney
lot of
does.
private equity firms that are big enough to do this. People are saying Endeavor might be
I
interested.
would love nothing
Endeavor
more than to see
owns
The Rock. And,
UFC.
I'd like to see The Rock and like one of his PE
So it's
partners.
Ari Emanuel owns UFC. This would be a natural thing to slide in
yeah,
next to it.
they've been rumored.
Are they
Yes.
big enough? I guess they could borrow some money.
They could borrow money.
Yeah.
They could get backing to do it. if they're the
For,
right
for,
candidate.
for anything to work, you have to keep the wrestling people in charge. You can't put like normal TV, like Hollywood entertainment people in charge of the content and the creative because they don't understand the business and they would ruin it.
What would they? Why they would like do too much playing up storylines and not enough of the actual sport?
It's just such a different dynamic than like producing a sitcom or a drama on TV. It's just like you've got fans there that are this source of feedback every night. So like things change on the fly, like plans change in terms of which wrestlers are getting pushed or pushed up or down based on crowd response and all these
You
things.
think you throwing your hat in the ring? You think you could do it? Up for the job?
Why do I feel like it's the same people on top as were on top 10 years ago? Like Roman Reigns, Brock Lesnar. I've been hearing these same names for maybe 15 years.
The ones that
Who are
become
the
the,
new- like,
the
who
ones
are
that
the new
become the
stars?
megastars are they do stay at the top for a while. Like Cena was on top forever, but he's pretty much
Right.
gone now. He'll come back like once a year, maybe something like that. Brock,
He's a legitimate movie star now.
yeah. He's
Bankable,
going the
Marvel,
Rock path.
whatever he's doing. Yeah.
Roman Reigns is top guy now, but even him, he's starting to scale back. I could see him going the Hollywood route at some point. And so, but then you've got other guys that are probably not going anywhere anytime soon, like Cody Rhodes or Seth Rollins or other names that are maybe not quite household, but they're kind of at the top of the card for
Right.
fans. Yeah.
Okay. It'd be cool if The Rock found a way to buy this.
So that'd be my favorite
amazing,
thing in the world.
right? Yeah.
He's
What a
actually,
great story that
There's a
would be.
rumor he's coming back for one more match at this year's WrestleMania in April.
Dude, he should
it's
unveil.
it's at SoFi Stadium.
He should show up with like private equity guys in the ring and
Nothing-
like
nothing would
sign,
make-
sign
Oh,
the deal.
Can you
well. I let me break in with Netflix. Up
Oh, here we go.
8%.
Are you winning?
on news of acquiring.
Let's say
Where is it?
it's up 8%.
What they do
Al, give it to me in points, please.
Stop. Netflix earnings.
in bips.
Can I have that in
Anyway.
dollars?
Anyway, carry on. Let me see what's going on here.
All right. What is this? What is this Unify by CAIA? Tell us why you're excited about
Yeah,
this.
thanks. So my primary reason initially for coming to New York this week, in
Was the
addition to
compound.
Oh,
Friends.
Netflix!
obviously to do the
7
podcast
million.
with you guys.
Sorry,
but,
7 million new paid subs versus
wow.
4 million
That's a
estimated.
huge upside surprise. That
Huge.
stock's going to
This,
400.
this is important.
Sorry.
Phil.
Yeah. So, in addition to doing the podcast yesterday, I'm part of an advisory council for this new program put on by the CAIA Association, which is CAIA, which stands for Chartered Alternative Investment Analyst. It's a big designation, much like the CFA or the CFP or
Is there wrestling?
something like. There's no wrestling involved. That's the one. That's one of the downsides of it. But so the traditional CAIA designation, very intense. A lot of time and hours you'd have to go into getting it. More for the true analyst type of person. for a financial advisor, they're building a program that's more geared towards client-facing advisors who want to become more competent in the world of alternatives, especially if they're using them in client
They
portfolios.
want to teach them just enough to be dangerous.
Yeah, exactly. Like
Okay.
get them a nice foundational piece of knowledge base. And then, so the way they're structuring it, there'll be like a foundational certificate you can obtain, as well as these micro credentials they're building on specific topics within alternatives. So a couple of the micro credentials are getting close to launching, one this quarter, one next quarter. First one will be digital assets, then private debt. So really cool group to be a part of.
So that's called Unify.
Unify, UNIFI. Really cool program. The full program should be available kind of end of this year, beginning of next year, but they're going to start with these micro credentials early this year.
So you see financial advisors going out for this credential
I
primarily?
think this will be something that a lot, especially larger advisory firms that are allocating to alts in their models, they're going to want their army of advisors to be equipped to have these conversations. So I could see big RAs putting their whole roster of advisors through this program as a training and development exercise.
You should use me and Doug as guinea pigs.
Absolutely.
Tell us which one we should go for.
I'll do it for
Yeah,
free.
so-
I'll do it for free CE.
It's a really great group. A lot of the like kind of heads of alternatives type roles at your big asset managers like BlackRock and Vanguard and JP Morgan, et cetera. So sharp people. We're helping design the curriculum and the content and really excited to see
All
what
right, let's
that,
do some business.
looks like.
What is CAIA's annual marketing budget?
I don't know.
All right, make some phone calls. You guys should unveil this at Future Proof.
Let me talk to the
Yeah.
CAIA folks and see if we could do something.
Dude,
that'd
let's
be
make that.
awesome.
So we launched Future Proof this week. You guys gonna come?
Yeah, my whole family's coming.
Are you in?
Oh, nice. Really?
I'll be in
Oh,
again.
no,
Yeah.
Heather,
100%.
myself, and Cliff.
Okay.
I'm gonna leave the kids at home.
Okay.
But we're coming. Bring him numbers this time.
I'll be there.
It is going to be even better than the last one. I mean, how sick was Big Boy? We there for the
Didn't
concert?
you call him Mr. Boy?
I called him Mr. Boy.
Oh my!
That was kind of fun.
We got to meet him backstage, and like, can we do pictures? He's like,
He was a man.
put his finger up. He's like, 1 sec, and he tells this guy, "Pass me my stunner shades." And I was like, "Oh my god, this is the greatest."
Michael
moment of
goes,
my
"Thank you, Mr. Boy. It was very nice to meet
It
you."
was great. It's gonna be even better
Sunshine
next.
fan.
Michael was
year.
like, "Mr. Boy, what tunes are you gonna play for
Oh
us
my
tonight?
Stop it. I know the hits. I know the hits.
What jams?"
Wait, so who are we getting this year?
Joe.
Well, can we
So-
say who we want? No, let's not. It's too
No,
early.
let's
It's too
not do
early.
that.
It's too early.
We're gonna. So it's gonna be everything's gonna be like last year, but better
And bigger.
and bigger,
Huskier.
huskier. You might even say. Future Proof 2023. If you work in fintech, financial advice, wealth management, asset management, really anywhere in the industry, and you're not there, I don't really know. Like, do you even exist? Right? Like that's how I'm positioning this. So I hope our listeners who are professionals make sure that they get registered because it's gonna be amazing. And I think one of the big things we're gonna do this year is like give people space that they can like answer emails and work somewhere you could plug a laptop in and
Have
not
a
have to
seat.
go back to your hotel room. Like somewhere you could. So we're gonna build some stuff like that.
Good catch.
Yeah,
Yeah.
like just like basic stuff that we learned from last year.
More clarity on who's speaking when.
If that was your biggest issue, I mean,
For it to have been a
fantastic.
first time event like that, it was an absolute like smashing success.
It was awesome.
You guys all
We
crushed
had
it. The whole
we had
team.
Matt Middleton here this morning, just
Yeah.
going over plans for it.
Like you have to understand. I grew up in the wealth management profession, and I from a very young age would go to conferences and literally be mean mugged by like 70 and 80-year-olds, like pissed I was even in the same room.
Yeah, how
And
dare you ask a
Were
question?
you,
How
were you sneaking into panels when you were
Dare
like a
you
10-year-old?
be? How dare you?
You're sneaking into smart beta panels?
Yeah, no, I'd have like this is before.
He was like almost famous.
Listen, I would be on a laptop, like typing up notes or doing something, and people were like, "Could you stop type?" Like before you bring laptops in, I was a college kid, and I told you to your face when we were there. I said, "Look around." You know, we were having drinks. Look around the room. Everyone was like younger than me, and I just thought that's how you
You
knew.
thought you were the millennial advisor.
Dude,
We had Gen Z advisors there.
they were
How
like,
cool is that?
dog. I was like, whoa,
Yeah.
you know, like
Wait, what's
No.
the oldest Gen Z?
We had advisors in their 20s.
yeah, like 24, 25-year-olds saying, "Hey, Doc," I'm just like, where did and it was
It's
just
the coolest thing. We had advisors who were born right around the time I got my Series 7.
my
I think just conceptualizing that for me was really cool.
Cliff is freaking out, like to go. He forwarded me every email that like came out yesterday. I'm like Cliff, settle down, buddy. We're going. It's all good.
Let's do this thing about let's do this thing about inflation impacting 92% of millennials' home buying plans. So, Doug, you're the millennial expert. You're like known for being the advisor to millennials.
I'm a relatable millennial guy.
Tell us what's going on.
Yeah. So, rising rates ain't helping matters when it comes to buying homes. You know, what I'm seeing is not a lot of price action on the downside. So now, if it wasn't hard before, it's even harder now. So it's just been very frustrating.
But aren't you bidding against less other buyers?
Yeah, but the inventory hasn't really, and I'm primarily talking about like prime markets, like outside major cities, and forgive my geographic bias to like the New York area or outside, Miami or LA and stuff like that is typically where my clients are. So it just haven't really seen opportunities for people to come into the housing market and feel like they're either getting a deal relative to how crazy things were a year or two ago. It just hasn't gotten materially easier to buy a house.
Now what's changed?
Or put 10% down. You can't even do that.
Right. So the financing cost is up, but the price is not down enough to offset that?
Right. So you still have big down payments to make. You still have to come up with a shit ton of cash on arguably still overpriced residential real estate. It just hasn't gotten, whether it's gotten harder is one thing. It just hasn't gotten easier. And everybody wants it to be easier.
1,000 millennials looking to buy a home were polled.
Yeah.
Looking to buy a home in the next year specifically.
Yep.
More than 9 in 10, 92%, say inflation has impacted their home buying plans. You know shit. More than 1 in 4, 28% delaying their home search due to it. So yeah, I guess that's just the reality of life.
Yeah, it just sucks.
Yeah,
it just sucks.
There's not a lot you can say about it.
Well, the good news is rent is going up. So
there you go.
We bought our first home in late 2018. I just feel so like thankful and fortunate. Like I didn't have to.
When 2018?
Yeah, like, it's just like you just like don't control the timing of your life when you're doing
when you
this.
bought your house?
When?
When did you? 2018? When did you buy your house?
Oh wow, you're related.
So here's what I do. I talk to young people about this issue, and I sit them down and I say,
none of this is true, by the way.
No, I do. I will sit them down on my knee, and I will.
He crowds them out with his elbows.
And I will say, Jaden,
Tristan,
just understand, like as bad as things seem right now, could always be worse. You could be Duncan. Duncan is renting an Airbnb. All of his earthly possessions have been soaked.
I heard this last week. I'm so sorry to hear that.
So I just say,
sorry, Duncan.
Understand that there are levels. There are levels. What are we doing now? What's your story?
No,
How do we
I
fix
was
this?
just gonna say, luckily, our personal property is mostly okay. It was just stuff on the ground got messed up because it was
So like
a
what?
centimeter
Like
of water.
furniture?
And rugs and yeah, not much furniture actually, but it's more just the pain of having to be out of it.
Did the rug tie the room together?
Yeah,
did.
the
It
rug
really
really
did.
tied the room
It
together,
really did.
dude.
But yeah, the remediation costs is the craziest part.
But why do you have to bear those costs?
It's our insurance technically, but our renter's insurance is capped, and they're wanting $17,000 to move our stuff out.
That's insurance fraud.
Are
by the
you
way.
going to
That's
go
what that
back,
is.
or are you just going to find a different rental?
I'll do it myself before I do that.
Before you do what?
Pay that much, I'll move the place out myself.
Right, but you're not going to go back to that building.
I'm supposed to. They're not letting us out of our lease.
You got to be kidding me. Do you have an attorney?
No. Do I seem like someone who has an attorney?
John, are you giving him any advice?
Yeah, as much as I can.
Are you telling him to get a lawyer? How many people do you need to hear this from? Dude, let's get this sorted out off the air. All right, we're gonna fix Duncan. We're gonna fix your situation. They can't do this to you and then take advantage of you after the fact. I might actually pro bono come back to legal work just to take this case.
Wasn't Barry a lawyer?
Yeah, Barry was a lawyer.
Oh, yeah.
You know what? I got a lawyer for you.
My cousin Benny.
Better call Barry.
My cousin Barry. Barry's going to insert himself in this situation, and I promise you'll be happy with the resolution. I guarantee it.
So Reed Hastings is stepping down. He's going to become chairman. He's been doing this for a long time.
Smart move.
Ted Sarandos is staying in as co-CEO, and this COO is becoming co-COO.
Wait,
Co-CEO,
wait,
sorry.
they're going to have a new CEO?
Well, Ted Sarandos and Reed Hastings are both co-CEO.
Wow.
Reed Hastings is becoming chairman, and somebody's stepping
How do you
in.
feel about this as a long-term shareholder?
I feel good.
He'll be out tomorrow. How much you up, percentage-wise?
50? 40, 50?
50%? Look at you. I sold it early.
No big deal.
I blew it out last
Listen,
week. Like an idiot.
I let my winners ride.
Yeah, I like to make sure I get rid of my winners very
Made the
quickly.
trade.
All right, we're gonna do favorites. Did you guys have fun today?
Blast.
Are we gonna do it for real now, or
Yeah, Phil knows. Phil knows.
Hold on.
wait a minute?
Say his first rodeo.
I thought I get like a jacket.
Can I start?
Now you know I listen every
Michael,
week.
you're going first.
So last week on the show, I think we spoke about Domino's delivery pizza. Ivan Doug is shaking his head aggressively.
No, I love it. Ooh.
Oh,
No.
So I
Same
haven't
crust.
had Domino's in I guess since I got kicked out of college, which was a long time ago. And I was in Minnesota over the weekend, and I was so excited to get Jimmy John's. I'm a big Jimmy John's guy. It was f***ing closed at like 8:30. I have to think it was no.
What is? I don't know what that is.
It's just a great
It's
sandwich
a
place.
sub shop.
You don't know what Jimmy John's is?
No.
Well, they don't have them out here.
Wow, I did not know that.
And so the only thing that was open was Domino's, and I was all in.
Yeah.
See that? Wait, that's fat. That's fat privilege right there. You're like, you don't know what Jimmy John? Why would I know? I'm from Long Island.
I assumed it was a national
Yeah,
chain.
no, it's not.
Okay.
So anyway, so we got Domino's. It took 2 hours to get delivered. I fell asleep. My friend had to wake me to get Domino's, and it was disgusting. And
I thought you were gonna say it was good. I always liked that.
Yeah,
you
thin crust
guys
pizza,
are right.
money.
It's good.
no, honestly, this I'm gonna say this was an outlier because I am on Team Domino's. Like I f- with Domino's. This was terrible. It was
Really?
really bad.
Domino's
What did you
Tech.
We got what do we got?
I'm
we just
really
had
sorry you had to go through that experience.
thin crust. Yeah, it was horrible.
Oh, thin crust is your first
Thin
mistake.
crust is the way to go.
Thin crust with
no.
pepperoni.
Oh,
I'm not a
it's
thin crust
good.
guy. And we got cheesy bread. Hello. When I want cheesy bread, I want the sticks. I want the sticks with the cheese melted on top,
Yeah.
sauce on the side to gunk. This came with a fucking vat of sauce with cheese on top. It was disgusting.
Oh, that's terrible.
horrible.
Uh,
Sorry for your loss.
But anyway,
Maybe if
my least
if
favorite.
you ordered correctly.
So I know
yeah.
everyone put this in the doc, but let's just take a second and talk about The Last of Us. And I kind of thought that they were going like Walking Dead. This was fucking dark.
It was awesome.
It was
I haven't seen it. I can't
Oh,
comment.
Did you watch it? Super
No,
dark.
I don't even know what it is.
Watch it on the plane home. Do you have HBO Max?
Yeah.
All right. Watch The Last of Us on the way
It's
home.
gonna be a
Dark.
grand slam. Everything they do is.
Have not gotten it out of my head.
It's amazing.
Give me more now.
It's a. You know what I did?
Everything they do.
I went back
Oh
and
my
watched the first
God.
Walking Dead
yeah.
to compare the two.
How to stack up.
The
It's a good
first
move.
Walking Dead, the first half hour of the first episode was great, but then it started to get like cheesy a little bit. This, like every frame of this show was like really
No,
well
because
done.
they're professionals.
Complex.
It's
Like-
HBO.
It's HBO.
Complex did a side by side of the game and the episode.
What's the game called?
What do you mean?
Is the game called The Last of Us?
It's called The Last
Oh,
of
I didn't
Us.
know that.
It's based
There
on the
were
game.
some scenes that they were filmed exactly like the game.
It was when he was on the couch, and
Oh, yeah?
it was identical.
So, even the first scene in 1968 was incredibly written, right?
Yeah.
Where they're just talking about like the fungi or whatever. Like,
yeah.
so good.
So we won't spoil it for anyone, but the girl is awesome. She
Game of Thrones.
So she was the girl in the last couple seasons of Game of Thrones
young
that was like the
queen.
last to represent her house.
Yep.
And she was a total badass.
She's the best.
She's a really good actress, it turns out. Not just good in that role. And what's the guy's name?
Is it Pablo Pascal?
Yeah.
Pedro.
Pedro, my
Pascal.
bad. Pedro Pascal.
Mondo.
Oh, the way that they messed with him to be older and younger, like the flashback, like holy moly.
Anyway, it's like apocalypse stuff. I don't know if you're into
But it's
that
not- but it's
genre.
zombies,
I'd
but it's
probably
not-
like it. My wife would hate it.
no,
so.
my
watch it on the
my
plane.
wife said I'm out. She saw.
Heather can't get enough.
Oh, Sprinkles is watching it.
Yeah,
It's
think she's
so fucking good.
but it's zombies,
good.
but it's not like zombie porn. It's not only zombies.
No, it.
Wait, it's
No,
not
it's
zombie
also
porn?
not.
No,
It's not
no.
traditional zombies.
Gotta stop. I'm
Yeah.
getting too excited.
Yeah.
It's
guys.
like a fungus parasite that just makes people crazy.
How about the mouth?
They don't
crawler
look
things?
like Walking Dead zombies. It's not like that.
Okay.
Dude, I got friends
You had me a
recalling
fun. You had me a
shit.
fun guy.
I got friends
Yeah.
recalling shit from the game, and they're like, "When's this gonna?" It's
I'm a
getting,
fun guy.
All right. So I think all around we're
All
all
around.
we're all
Yeah,
in on
all
The
in.
Last of Us.
I was all in from the trailer.
They said it's
I
the
wasn't.
second biggest HBO premiere of
Yes.
all time. Did you see that?
Yeah, it's smash hit. This thing's
Smash
gonna
hit.
be yeah.
It's not crazy because people love End of the World
The biggest
as like a subject matter.
Yeah.
People will they'll always give it a shot. If that's the plot, I'm in.
The best takeaway I saw in an article was like, this is now set the tone for video game to movie here on out. You're going to see more.
Because
of that.
disagree.
You disagree?
It's impossible. Doesn't work.
historically,
Although the new
it's
Super
always
Mario
bad.
Brothers looks very good.
Set the tone of how to do it right and blow it out of the water. You'll see a lot.
HBO
You'll see a lot
can
more.
only do so much, and everyone else is gonna.
It's Mario, by the way.
That was my favorite. I would just add to that. So I am a Gen Xer. U2 is putting out some new music. they're taking 40 of their best songs and redoing them. They're basically like when we wrote these songs, we were in our 20s, we were young men, and now these songs have different meaning to us, and they want to
Changing
they want
the,
money.
changing the lyrics? Or?
They want money. No, not changing the lyrics. They redid Pride in the Name of Love, and they put that on Spotify and Apple Music.
So what's different?
One
about
song. Go listen to it.
Okay. I'll be honest with you. Not a huge YouTube
Are
guy.
they going to put this on our
Same.
phones
Fair.
without us
Same.
saying
That's fair.
anything?
Saw them twice.
Yeah, they're going to insert it
And-
directly into your
Yeah.
AirPods. They're not going to tell you.
Del Bono went on a rant for like 15
It's one of the greatest bands of all time, honestly.
I'm not here to say I get it.
You know what else he's doing?
my thing.
He's doing, I might have to go to this. In April, he's at the Beacon Theater 11 nights doing like, he has a book coming out in March. So he's doing like what Springsteen did. Like a
Oh, the
one-man
play?
show, play
Yeah.
some music, tell some stories. I might have to go.
Heather said that Springsteen show.
That'll be hardcore Gen X. Like,
Yeah.
that'll be, the whole audience will be.
100%.
Yeah. All right. What, Doug,
Hey.
we need your favorite. What do you got?
Oh,
Let's talk about The Last of Us again.
I would. I want to. Something blew my mind. My friend showed me this thing called Crisp.ai
With a K.
with a K.
Okay.
How
What
do you
is
spell
that?
it?
KRISP. The website. That's what it's called. But it's Crisp.ai. It's a piece of software. It's a plugin for like Zoom or any video conferencing software you got. It like if you clap, the clap's gone. Any background noise, any echo, gone. It's witchcraft.
So we don't need Duncan anymore.
Don't need donkeys. Gone.
Okay.
It
We'll just put the shit on Zoom.
it's free. Yeah.
Okay. Love it.
Wait, honestly,
It's
it just
insane.
gets rid of background noise. That's all it does. What else does it do?
Echoes, background. If your kids are having like a blast in the background,
Smacks your kids.
gone.
So this is a work from home app.
This is no. If you do Zoom or any video conferencing, whether you're in the office or at home, and I don't know why you would not have this.
Does it work as well as the auto-generated backgrounds on Zoom?
It's flawless so far. It's insane.
Dr. Phil Slatton.
I don't know what to tell you other than go try it out. It's free. I have no skin in the game.
Does
I'm
it
just.
call you when you're having a bad day?
He's going to cut this out of the episode.
It tells you. No, it tells you how many minutes you.
Yeah, Doug, you're wasting your breath. This isn't going to make it.
Sorry, it's gone. We're done.
Wait, no, I read about this. I'm curious, does it learn your voice? Do you have to like train it to your voice? Is that how it works?
It took
'Cause
point one.
otherwise, how does it know?
Point ones. I don't know, dude. I
Will it
don't
call you
know.
on your
I
birthday?
don't know how it does this, but it does it. And the last thing I say is, I'm an electro guy. I know no one's listened to tech. Nobody listened to techno, but
I do.
Oh,
It's a great Eminem reference.
Yeah, it was good. Fred again's latest album, Actual Life.
Wait, I don't.
3,
What is Fred? I know a lot
He's an
about music.
artist.
What is Fred again?
He's an artist. He's an electro artist.
He's,
and
like he's like Moby.
It's like,
no, not even. He's his.
I'm kidding, I'm
yeah,
kidding.
yeah, no. And now he's shown up on everyone from Skrillex to.
When do you listen to this shit? When you're dancing around like by yourself?
all I listen to is
Peloton.
electro.
No,
Ru-
seriously.
running.
It's workout music for you.
BPM, Mint, Spotify, yeah, working out. No, I listen to it all day.
No, I mean-
there's certain
in the
types
car.
of EDM I can listen to, like when I'm like just working.
yeah. There you go.
Oh yeah.
We can't do that. You just,
I don't think you
get
picked
us all
that.
pinched.
I don't think
God, you can't play copyright music on my podcast.
Why? We're hooking them up.
if you're a '90s kid, if you're a '90s kid and you were listening to like Crystal Method or like Paul Oakenfold in high school, your friends made fun of you because you weren't listening to hip hop. So
Oakenfold, I was listening to.
yeah, Paul Van Dyke, you know.
You have any references that are not 25 years old though? Like, who else? Like who else? do you
Rufus
listen to
the
that's,
Soul is
current?
my favorite.
Who do you-
Rufus the Soul.
Who do you listen to that's current?
Oh, I mean, I'll listen to anyone from Tiesto to Audion. I mean,
You saw that?
Oh, the White Lotus.
the
thing
White
that
Lotus
you shared it
drop.
on.
yeah,
you
Yeah,
shared it
that
on
was,
Instagram.
that was super
Yeah.
cool. Like
That was amazing.
I know to name drop like Tiesto, like the biggest of the big, but the guy just keeps crushing and
So
crushing and
Ben
crushing.
just slacked me. Here's a tweet for you. I predict Reed Hastings will come back to Netflix as CEO.
Oh,
wow.
That's good. He just stepped down 5 minutes ago. Not bad.
Not bad.
Anyways, Fred again.
is he
Blown up.
confident in that assertion?
All right, we'll check out Fred again's latest album, Actual Life 3, when we're making TikToks.
Yeah.
All right.
It worked.
Phil, what do you got?
I got a few things. TV show. My wife and I found this the other week.
Monday
Got
Night Raw.
Weird title. It's called "The Sex Lives of College Girls."
Oh, my wife
It's not a
loved that.
porno. It's on HBO.
Oh, then I'm out.
It's freaking hilarious. Mindy Kaling's the creator. She's not in it, but it's like these 4 girls that room together at this like small like private.
It's comedy.
Yeah, comedy, like laugh out loud, funny, love it. I didn't realize. I think it came out like in 2021 maybe, but yeah, we're just really enjoying that. Book.
What is that on?
HBO.
Okay. All right.
And
So
then-
I said I'm a Netflix shareholder.
Yeah, none of this
Coming in here
HBO
with
mom
these HBO
talk.
recommendations.
Book. I started on the way out here. I'm almost done with it. It's called Unreasonable Hospitality. If you like Danny Meyer's book, Setting the Table,
Setting the Table,
like
yeah.
this
One
is
of
the
my
guy
favorites.
that ran front of the house for 11 Madison Park.
Okay.
And so it's just really about that restaurant, how they became like number one in the world and using this like approach to hospitality. Obviously the food was very high quality, but I think there's a lot of really cool lessons you can learn in any business around hospitality and just surprising people to the upside and this like this shared need we all have of like feeling like we're being taken care of.
Yeah.
And just going like a
Like
little
going
bit
going
extra.
above and beyond and just like
Yeah.
wowing people with like attention.
There's
to
so many
detail.
parallels to the restaurant business and
Yeah.
our business.
And there's so many cool stories and the anecdotes in there about
Yeah.
like things they've done for like customers and all that stuff. So I should finish on the plane ride home.
Is that
tomorrow, but-
is that a new book?
Yeah, I think it just came out.
Oh,
so
okay.
Really, really good. Enjoying it. And then podcast, if you're an advisor.
11 Madison Park in its day, I think was the #1 restaurant in New York.
Yeah.
Yes.
Yeah.
Okay. And they went vegan now or something? Nobody
Yeah.
goes there anymore for some reason?
Yeah, I don't know. And
Bad
I
move.
don't know if he's involved
Duncan
in it anymore.
smiling
but-
ear to ear.
What?
Vegan.
Well, no, I think they
are.
they're considered to be the best vegan restaurant in the world now, right?
Yeah,
Okay. Have you been?
I haven't been.
When's
It's
your bir- when's your-
$300 a person.
When's your birthday?
August 27th.
Okay. I'll keep that in mind.
Take 'em.
All right.
And then one
if it's still in business. Okay.
And then, one podcast I've been enjoying is called the Alt Goes Mainstream. It's hosted by Michael Sidgmore. He's a venture guy. He does a lot in like the kind of alternative investment, like technology space. But he's had some really cool guests, like CEO of Carta, CEO of Franklin Templeton, founder of iCapital. Those
Oh,
sorts
very
of
cool. I would listen
guests.
to that.
I
Yeah,
spoke with
it's like
Michael.
if you're interested in learning more about like alternatives, obviously go buy my book,
Nice
The
guy.
Allocator's Edge, but also listen to this podcast.
You see what this guy just snuck
Yeah, it's a
in
good
a
plug.
book
Little
reference.
plug.
No, it's all right.
No, say it again. What's your
Say it
book?
again. The Allocator's
The
Edge.
Allocator's Edge.
we're
a
pumping
modern
stuff?
guide to alternative
Wait, is it-
investments and the future of diversification.
Okay.
Yeah, we're pumping stuff. What do you got?
I have my new Substack.
Tell us all about it.
This is the top.
Oh, that's a great name.
It's a good one.
I can't believe that wasn't taken.
I know, right?
You know who used to make that
It's very
joke all
good.
the
You're doing
time?
good.
Lindsay.
Yeah.
Every time he'd be like, I remember when we got our office space
We're
here
both schlemiels.
in January 2018.
Schlemiels.
He's like, this is the top.
Yeah.
The day we moved into our office.
That's why it brings me on.
Why
this
did you name? Why
podcast.
did you name your Substack? This is the top.
Because you find yourself saying that, and it's just one of those things where you have to question, like, does it get better?
This might be the top of Substack.
Yeah.
No offense.
It's all down.
Just
Yeah.
kidding.
I've
all
read
turtles.
Doug's first couple posts on it, and they're great. So I'm glad to see you back in the room.
All right, I'm all in. I'm going to subscribe.
Cool.
How often are you writing?
Weekly.
Okay. You think you stick to that?
I did it 80 times before COVID.
Dude, I haven't written a blog post in 3 weeks.
But
I
you're
don't know
you're
what's wrong with
goat.
me.
You're a goat. You're fine. You
I
can
don't-
afford. You can afford to do that.
I don't think I know how to write
cannot.
anymore.
Yeah, you do.
You know what goes on? This is a true story. This is going to happen to you.
Oh no,
I'm like too entangled in so many things.
that's already happened.
I write one sentence and I'm like, who's going to get pissed off that I do business with? That's where I am. Isn't that sad?
But I'm lucky. I have an. I'll say.
What I need to do is quit this stupid fucking firm and get back to writing.
Yeah, just be a full
No,
time writer.
I can't say anything anymore. This is a longer conversation. We don't have to
Yeah.
have it now. But that's where I am. And so I just like gave up.
You'll be fine.
I think you should
Will I?
Do you want to write for This Is the Top? It'd be great.
I want to write
Yeah,
pseudonymously
be a
for
guest contributor.
Guest
for This Is
contributor.
the Top. Just don't tell anyone it's me.
Dude, let's go.
And say what I really want to say.
Go for it.
All right. Listen, we've said it all, right? What would you say? Good show?
Great
Yes?
show.
Great show. A lot of
Michael,
fun.
was this
Always
good
fun.
for you?
Here's the music.
Very.
Are you already listening to the Netflix conference call?
It's very.
He's buying more shares of
All
Netflix.
right. Hey, amazing job. Phil Huber, Doug Boneparth, two of my all-time favorite people I've ever met in this industry. Not to overstate. Truly.
Thank you so much.
Truly,
We
you
love
guys
you. We
are-
love you.
You're both mensches and smart and funny, and we love you guys. Thank you so much for coming.
Thank you.
Everybody follow Phil. Everybody follow Doug. Check out their recommendations. Amazing job this week, Duncan. Great job, John. Great job, Nicole. Sean, well done in the doc. Hey, everybody. We will see you next week. All right. Now let's get warmed up.
Yeah, here we go. I knew I was waiting
Let's
for
hit
it.
it
There it is.
I gave it to you.